The risk you take, you should get paid for. And so right now, Bitcoin is much less risky today than it was a decade ago. And so people are going to get a lower return. Now, what I think is really interesting is also that lower volatility in Bitcoin is allowing these large pools of capital to come in and start playing. And so in a weird way, the volatility coming down is opening up the total addressable market of Bitcoin. And what we have seen is less volatility to the upside, but that likely also means less volatility to the downside. Usually in bull markets, you see 4, 5, 6 different 30+% drawdowns. We haven't seen that during this bull market. So you're just getting dampening of volatility over time, which frankly is boring to a lot of the early investors. And I think that's why you see a lot of those guys starting to sell.
Pompliano starts with a key observation. Both Wall Street and crypto are going through a reckoning. For years, the crypto community viewed Wall Street as slow, risk-averse, and overly centralized, while Wall Street saw crypto as chaotic and speculative. But now both sides are learning from each other. Institutional investors are realizing that Bitcoin is real, not a passing trend, not a speculative bubble, but a legitimate asset class with staying power. Meanwhile, crypto-native investors are learning that Wall Street plays a different game.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
So you got a price target of 1.5 million. Okay, so that's 15 times. You're starting at 15 times as if you can make a forecast like that with any degree of certainty or accuracy. And then your resolution on the whole idea is so fine because of what you're calculating, you can cut 300,000 off. And then it's only going up 12 times. The whole thing just seems silly. I don't know why we really ran it there. But we are at 100,000. Do you think it goes below significantly, or this is a nut? We've seen this movie before.
Yeah, look, I think that there's a reckoning that's happening across both crypto and Wall Street, which is the Wall Street folks are realizing that Bitcoin is real and it's going to be here to stay. At the same time, the crypto people are realizing that Wall Street plays a very different game. Wall Street actually does not want an asset that goes up, 100x and then drops 80% every 3 to 4 years. They want something that is much more predictable, much more stable. And so
why'd they get so involved with it? Because
Bitcoin is not as risky today as it used to be, right? If you were buying Bitcoin in 2012 or 2025,
it was at 125 about a month ago.
Of course, but if you think about the risk you take, you should get paid for. And so right now, Bitcoin is much less risky today than it was a decade ago. And so people are going to get a lower return. Now, what I think is really interesting is also that lower volatility in Bitcoin is allowing these large pools of capital to come in and start playing. And so in a weird way, the volatility coming down is opening up the total addressable market of Bitcoin. And what we have seen is less volatility to the upside, but that likely also means less volatility to the downside. Usually in bull markets, you see 4, 5, 6 different 30+% drawdowns. We haven't seen that during this bull market. And so you're just getting dampening of volatility over time, which frankly is boring to a lot of the early investors. And I think that's why you see a lot of those guys starting to sell.
If you don't take her price targets into account, the point she was making, I thought was interesting. And that is that maybe the notion that Bitcoin becomes more than just a store of value in digital gold, the idea that it eventually becomes something for cross-border transactions and instantaneous payment, that could be, she's basically saying stablecoin could take a lot of that market share.
I would go even further. I think it's already taking that, right? I think that's kind of her point.
So Bitcoin's never going to be anything other than digital gold?
For years, I think I've been coming on here and saying, hey, we know for sure that people want to use it as a store of value. Maybe one day it'll become a medium of exchange. The question of always are you going to buy your coffee with it? The hard part about using Bitcoin for transactions in that manner is if you think Bitcoin is going to appreciate, you don't want to spend an asset that is likely to appreciate in the future.
The guys that bought the pizza that now
correct. And so instead, what do? You spend something that you think is going to depreciate over time, which is the US dollar. And so the rise of stablecoins, I think, is really just taking the exact same asset, it's the US dollar with the same monetary policy. You're putting it on new rails. And what we're finding is that the demand for dollars was way higher than we ever thought before. And I think that's a good thing for the United States and for the U.S. dollar.
A lot of times gold, though, is non-correlated with risk assets. In fact, sometimes it's a place where you can park during times of turbulence in the stock market. You might like gold or treasuries or something like that. Bitcoin is still like trading like a NASDAQ stock. On steroids at times.
At times.
When does that change?
Well, here's what's interesting: is at times it trades, right in line with Nasdaq. Other times it's not. I mean, earlier a couple of weeks ago, Nasdaq was running and Bitcoin was going sideways, right? And so I think that what people are really trying to figure out is it correlated? Is it non-correlated? Is it inversely correlated? And part of it is that Bitcoin is still in this transition period. My friend Jordy Visser's got this great way of framing it. He says Bitcoin is having its IPO moment. And the whole idea is that you have the early holders of Bitcoin who are dispersing that Bitcoin into the market. And there has been billions and billions of dollars of sales of Bitcoin coming from those early holders, yet the Bitcoin price is still at $100,000. And so there is this persistent bid coming from the traditional financial system saying, we want to buy the Bitcoin, and we're happy to take it out of the hands of those early holders.
Do you think that the possibility of Bitcoin becoming basically worthless has been taken off the table at this point? And if not, what would it mean to the financial system in this country, to the treasury market, you've got institutional buyers, you've got governments, you've got sovereigns, you've got people buying. If it went to zero, that would be that'd be a real issue, would it not?
Look, there's always some, person who's going to point out the kind of 0.001% chance of software
quantum computing,
or quantum computer, whatever. Right? But I think for most people, they see Bitcoin as not going away. It's here to stay. And I think that's why you see these large pools of capital starting to participate.
People that think it's going to zero never short it.
Listen,
I would short it if I thought it was going to zero.
The market is the referee. If people for some reason think it's going to zero,
that's a luxury belief. That's what I call it, because nothing can happen. You can believe it. Henry Blodgett still thinks it's going to zero. It's either going to 1 million or to zero. It's a luxury belief. You can have it, and no one's ever going to call you out on it, but you're never going to short it because you don't ever put any money down.
I do think that there is a theme that is happening right now that people have not yet wrapped their head around, which is this whole idea of crypto is going to be dead in a decade, right? People are not going to be talking about crypto. We're just going to talk about finance. Everything is now merging together. You have the crypto world and you've got the traditional finance world.
So crypto will be just so intertwined with the financial world that we won't even use the term?
We used to think about the internet, like internet finance, and then there's the finance industry. Now it's just finance. Same thing is going to happen with crypto, right? BlackRock, as an example, BlackRock could be described as a crypto company. Their most profitable product is their Bitcoin product. They're talking about tokenization all the time. Like, they are trying to adopt these new technologies. All of the big asset managers, they're trying to figure out, how do we play here? Do we actually have funds that invest in this space? Do we tokenize our funds? What do we do? And so over the next decade or so, crypto as a concept is going to be dead, and you're just going to hear people talk about finance. And I think that's a good thing. That's the maturation of the industry.
How long did the people point out that, how long were tulip bulbs a thing? They were for years and years and years. I don't think 20 years, though, was it?
Look, I think that what people forget sometimes is how quickly everything is accelerating now. One of the things that we've done is we've launched a software product called Sylvia that allows somebody to come in and they can attach their bank account, their brokerage account, their crypto account. They can upload their real estate, their private investments, their credit cards, all this stuff. And the AI goes to work and starts to immediately begin helping them get their financial life in better order, right? It's kind of help you grow your investment portfolio. And the reason why that's important is because now all of a sudden software can replace financial advisors or your stockbrokers. And so we think that the same way that AI is attacking things in personal finance with a product like Sylvia, we also think that the same thing is happening. Bitcoin is attacking store of value. We think stablecoins are attacking medium of exchange. We think tokenization is going to attack the stock market. It is the digitization. And the framework I've been talking about since 2018, 2017 is we had an analog financial system. We then upgraded it to an electronic QSIP system. So you used to have a physical stock certificate, a physical deed in your home, et cetera. It all became electronic. Now we are going from the electronic QSIP to this digital world. It's the same assets. It's the same market structure. It is just now going to be in a different form factor.
Pompliano then shifts to the broader theme of technological convergence, how AI and blockchain together are reshaping finance. He introduces Sylvia, a new AI-powered financial software his team developed. Sylvia connects a person's bank accounts, brokerage portfolios, crypto holdings, real estate, and private investments, and uses artificial intelligence to analyze and optimize their entire financial life. It's like having a personal digital wealth manager, accessible to anyone. Pomp says Sylvia is an example of how AI will replace or augment traditional financial advisors, just as Bitcoin is replacing gold and stablecoins are replacing bank wires.
The battle for the 50-week continues. As you can see previously, it has been a grueling test in the past, often including wicks below it. Right now, Bitcoin is essentially sitting right at its 50-week moving average. The 50-week moving average being right around $103,000, and you can see that's more or less where we are right now. Now, the reason why I think the 50-week moving average plays an important role in sort of the overall structure of the bull market is just because that's what I have seen in the past. So if you isolate all the prior bull markets that ended, you can see that once the weekly closes occurred below the 50-week moving average, the cycle was over. This is what happened in 2021, where we got below it, and once we got below it, I mean, it was already, the price of Bitcoin was already down like 30-something% from the highs. But when you get the weekly closes below it, that's usually not a good thing. Now, the reason why I've said you need two is because there are times where you'll have one weekly close below it and it really doesn't mean anything, like in the summer of 2021. We've already had wicks below it in the past, but again, no one's getting out of bed for a wick. So if you go back even further and look at the cycle before that, you can see the closes below the 50-week moving average meant it was over, and the cycle before that, the close below the 50-week moving average meant it was over. And you can see historically, as long as you're above that 50-week moving average, things are still relatively okay, right? And I've been really transparent with you guys about it throughout this entire cycle. And even back in early 2025, we talked a lot about holding support here at the 50-week moving average, and also, of course, holding support at the prior cycle high. One of the things right now, though, is that we've already gone below the sort of the highs from earlier this year. If you look at weekly closes earlier, you can see there's still a chance that we might be able to close back above it over the next couple of weeks or so. So I want to give, I'm rooting for Bitcoin. Like, I want to give it the opportunity to shine if it can. I don't want to, sort of make any premature declarations about like what has to happen. Obviously, from a time-based perspective, we know we're kind of running out of runway, but there is still a fight going on right now, and so let's see what happens. In terms of timing, one of the things that we've discussed a lot before is the upcoming death cross, right? And I know that sounds kind of scary, but in order for Bitcoin to really get out of the slump that it's in, it needs something, right? It needs something, and a lot of people are pointing towards like the liquidity and the reopening of the U.S. government, or tariff stuff. Just there's various things. But one of the things that I look at is that, we've had a lot of times this cycle where Bitcoin was trending down, right? And this, of course, times appears to be no different, where it's just kind of trending down. And ultimately, what you'll notice in the last 3 times that it was doing this, Bitcoin would kind of be sluggish until we got the death cross, right? Until the 50-day moving average crossed below the 200-day moving average. So when that happens, it obviously creates a lot of headlines where, a lot of people get nervous because it's the death cross, and then the death cross ends up marking a local low for a while. Now, I told you guys earlier this year that we would likely have 2 death crosses in 2025, and you can see we had one back in April, and that marked a low, and it looks like we're about to have another one.
Pompliano also touches on Bitcoin's technical position. Right now, Bitcoin is sitting near its 50-week moving average, around $103,000. Historically, this moving average acts as a critical line separating bull and bear markets. Whenever Bitcoin closes 2 weeks in a row below this level, it typically signals the end of a cycle. However, Pomp notes that Bitcoin has often wicked below it briefly without breaking down completely. He's watching closely to see whether Bitcoin can reclaim that level and confirm that the bull market structure remains intact. He also discusses the upcoming death cross, when the 50-day moving average crosses below the 200-day moving average.